Well, good afternoon, everyone. It is Friday, September 1st. I'm Dave Weisberger, the CEO of CoinRoutes. It's time for our This Week in Crypto recap titled The Market That Cried Wolf. Well, if you look at the market over the last week and all you did is look at the price, you'd see Bitcoin and Ether down around 1%, but more or less kind of trading around the same place it was last week. And you'd say, nothing happened. Well, actually, a fair amount happened. And what went on is directly related to the news stories we're going to talk about. And so let's just get right into it. The big news story of the week, and there are a few, the biggest one was the SEC got their head handed to them in their case again with that Greyscale sued them about their denial of the Bitcoin ETF. Now, this was a very big deal in the world and will matter a lot. I call it a watershed moment in the crypto industry because essentially what a 3-judge panel of 3 different age groups picked from 3 different presidents, both Republicans and Democrats, said the SEC in their denial was arbitrary, capricious, and they all basically said illogical. And that is effectively, if those who've been watching me for a long time know that's the same thing I've been saying. The SEC is illogical to claim that one could manipulate the spot markets and not manipulate the futures markets, which is basically what they claim. So Grayscale wins. The market immediately whooshes upwards as speculators pile in saying, okay, great, ETFs are going to be coming immediately. And the market goes to around 28,000 or so. Unfortunately, reality sets in and the market says, well, wait a minute, these ETFs haven't been approved yet, and it might take some time. And there's no follow-through buying. And so what happens? It comes right back down. And that's almost exactly what happened when BlackRock announced that they were filing. Everyone said, they're going to get done immediately. Well, it didn't. And the market went up to 31,000 and came back down. So traders this time were a little bit less over-optimistic. But at the end of the day, the story and the narrative is building. It's setting up for an incredible trading opportunity, I believe, that the market has right now, which is that Bitcoin has every single metric going for it. Enormous interests on the part of everyday investors who cannot buy it in the same way that they want to buy it. So basically, the way that I expressed this earlier today on Bloomberg is people who bought news that makes it likely that we're going to get future news were disappointed. Think about what that means for a second. So the SEC effectively is now chased back into a corner. Now they're going to take a few days to look over their options here. People have talked about them doing an en banc appeal where they may somehow all of the judges in the circuit court would effectively hear the appeal. That's not going to happen, because if that happened and they lost a unanimous opinion, which they would in all likelihood, they would look so dumb that they would pretty much all have to be starting looking for the help wanted ads, because I don't believe that they could survive such a stunning rebuke. This rebuke was really bad when you had both Democrat and Republican judges of 3 different age groups, all understanding that the SEC made crap up to try to reject the Bitcoin ETFs. And that's what they did. So what does this mean? Well, basically, it means this. It means there is a certainty that Bitcoin spot ETFs will get approved at some point. The SEC will continue to delay a little bit until they can figure out what they can do. It also means that the SEC has what I believe is a relatively short window in order to try to reestablish some level of political credibility. And if they don't do that, I think it will go very badly for them. But they can do that, because what they can argue in September or October, if they do so, that BlackRock and Fidelity's applications gives them the information sharing agreements that they have been asking for, which means that they would have some level of surveillance over spot Bitcoin. And they could call that a political win. They could say that, yeah, maybe our reasons weren't great, but this is what we wanted. And so it's good for investors. Now they can do that. And honestly, they should. If they don't, and they kick the can down the road to January, I would be surprised if this administration doesn't realize the political liability that it's become and do something about it. because we're talking about one of the most important swing demographics in the next upcoming election cycle, i.e. younger voters. And that is something very important to understand. So pretty much everybody believes that by the end of 24, there will be a Bitcoin spot ETF. And if you think about what that means, it means that there are potentially trillions of dollars of individual accounts with financial advisors and RIAs running accounts for high net worth individuals and 40 Act funds that can all own Bitcoin that can't right now. So it is a very big deal. More news from the SEC. We'll go in chronological order this time throughout the week. We'll get to the last bit at the end. Is the SEC settled a case against an NFT producer? And people are heralding this, saying, okay, well, the SEC sued NFTs. NFTs are dead, yada, yada, yada. Now, what's interesting about this case is, on its face, when I looked at the facts, it looks like I agree with the SEC. Now, you might be surprised, Dave Weisberger agreeing with something Gary Gensler does. Well, chances are I will agree with a lot of things the SEC does. In this particular case, though, the facts are very simple. The fact number one, the NFT producer sold the tokens to people, sold the NFTs to people, telling them that it was going to be used to fund the creation of future intellectual property. And they also told people that intellectual property would be used to increase the value of all their intellectual property. AKA, it sounds a lot like an investment contract. It was directly marketed, directly sold to fund an enterprise that people would benefit from. I have little problem that people who do that need to register. I mean, yes, we should have better rules for registering that apply better to NFTs and apply better to tokens, but should they register? Yeah, in that situation, that's basically where the law is. And there's very hard to disagree with that. In any case, I don't make a mountain out of a molehill with this case, but I do see it as something that at least is logical the SEC doing. The next piece of news that was interesting from this week is more interesting because of the knock-on effects than the actual case. The case itself was Uniswap that was being class action sued by people who lost money from rug pulls that were listed on Uniswap. And the judges in this case got it right. Full stop. Effectively saying that if you produce software that's used in a way that couldn't necessarily be controlled by the producers of that software, that's not the producers of the software's fault. And they gave analogies about self-driving cars being used to commit bank robberies, etc. That was really good logic. But they also went out of their way to call Ethereum and Bitcoin, of course, as commodities, not securities. I don't know why they did, but they did. And they also went out of their way to make it clear that Congress needs to act to give legislative authority because there are no laws that Uniswap was breaking. Now, once again, I didn't read through the entirety of the case, but it's hard for me to understand the context for that. But those opinions are important because this is the same judge that's hearing the Coinbase case. Now, if you remember from the last couple of weeks, Coinbase has filed a motion to dismiss that case. And the motion to dismiss is based upon the notion that what Coinbase is trading as tokens could not reasonably have been known by Coinbase to have been securities. Not the standard that they aren't securities, although in fact it looks pretty clear that nothing they were accused of trading as securities really would qualify as securities, but that they couldn't reasonably have known that. And if in fact this judge believes that, then she will agree with the motion to dismiss. Now, I don't know whether that'll happen. Friends of mine, legal lawyer friends of mine, handicap that as now as high as 25%. Whereas before this ruling, they were much, much lower. I don't know if that matters, but Coinbase stock has done rather well relative to Bitcoin and other things in crypto this week. So I think that other people are seeing the same idea. Lastly, and why the market retraced all of the gains that it had made on the Greyscale case was, unsurprisingly, the SEC said no, and they didn't actually say no. They delayed all 7 ETF applications that they could have delayed or needed to delay by, I think, some point this weekend. And by doing that, effectively told the investors who had moved to buy on the Greyscale news that they were going to have to wait some longer to cool their heels. Now, they didn't really say anything other than that it was going to be delayed. And the truth of the matter is, knowing how slow government is to do almost anything, The fact that they could have digested the Greyscale ruling, formulated their response, achieved consensus, at least among three of the commissioners on the Democrat side, who effectively been ignoring the Republicans for quite some time in most of their rulings now, it seems unlikely. And so, honestly, it's really much ado about nothing. But what I think is really funny here is how all of this is setting up for a tremendous buying opportunity. So I want to point out a couple of things. First, the more markets hype individual news events, the less sustainable rallies are. It is an old aphorism in trading that bull market rallies are much more sustained and controlled, but bear market rallies are much more violent. Now, I don't know if that's true in Bitcoin. We've seen rallies where Bitcoin has gone up by, well, factors of 3 or 4 during rallies. Actually, in 17, 18, I guess it rallied by as much as 7 times in a fairly compressed period. But at least in traditional assets, it tends to be true that the buying pressure isn't quite so quick. Now, the reason I mention it that way is because what I believe is an interesting buying opportunity will be that once ETFs are approved and that money can start coming into the market, yeah, there'll be an initial bump, but it will definitely be less severe than people think, but it will be much more sustained. And that's a big deal. And it actually looks like it's going to coincide with the normal Bitcoin halving cycle. So be very, very careful out there for those of people who believe that Bitcoin, while it's been totally delinked during the most recent leg of the stock market rally, will be fully linked to a stock market sell-off if there is one in the fourth quarter. Mike and Glenn and I have had this argument every Monday on our podcast, Macro Mondays with Scott Melker, with the Wolf of All Streets. I personally believe Bitcoin is delinked for a while now and will be delinked to both sides. Now, if there's news such as Binance getting shut, there's another idea. And I've seen a lot of people saying, well, Bitcoin is being capped by Binance rumors that they may get shut down by the DOJ or Interpol or whatever. I just want to point something out. The trade to make, if one believes that's going to happen, and be really clear, I do not have any information about this. I don't have any trade on about this. I do not necessarily believe this is going to happen. But if you do have that belief, then what you want to be doing is being long Bitcoin and short a basket of altcoins. Because Bitcoin does not need Binance's liquidity to march higher, but altcoins do. And so if Binance goes down and there's issues with liquidity in the market on altcoins, it's entirely possible that Bitcoin dominance will dramatically increase. And I think that's something that people should understand. And in terms of recommendations, it makes sense. I would also say, given all of the chatter, if you're watching me, and a lot of CoinRoutes clients fall into this, and you're trading predominantly on Binance, have other alternatives available. In particular, alternatives like OKX and Bybit and others like BitGet all provide different levels of safety, different levels of security, different levels of liquidity. All of them, however, are available for trading and probably have less of an overhang from regulatory risk. But it's about to be a holiday weekend. I hope everyone enjoys their long holiday. I'm going to do my best to enjoy mine, and just stay safe out there. We'll talk next week.